Welcome back to our channel today. We're diving into the stock market's pulse as we prepare for an eventful week ahead. It's crucial to stay informed about the factors that could influence your investments, especially in today's environment of volatility and uncertainty. Buckle up as we dissect key earnings reports and economic indicators that may shape market movements in the days to come. Kicking things off, we're buzzing about the earnings season. One of the biggest names grabbing headlines is Tesla, set to unveil its quarterly earnings after the market closes on Wednesday. This moment is pivotal, not just for Tesla, but also for investors keen on tech stocks. With shares drifting downward amidst growing skepticism over its robo-taxi project, the expectation rides heavily on this report. Strong results could buoy investor confidence, while disappointing figures might deepen concerning trends in the tech sector. Year to date, Tesla has faced a rocky road, plummeting nearly 11%. A stark contrast to the S&P 500's impressive 225% gain. Such widening gaps can shake investor sentiment. If investors digest disappointing earnings, it may revive anxiety about tech valuations, a sector that is already perched on shaky ground. Given the S&P 500's forward earnings ratio of close to 22, investors may reconsider their portfolios as the market faces headwinds, leading up to the U.S. presidential election. Next, we can't ignore the broader economic data that is set to be released this week. Important indicators such as unemployment rates and consumer confidence data will provide insight into the economic health and spending behaviors that impact market performance. The interplay between a robust economy and stock market growth is a dance we need to watch closely. The vibe of the economic landscape will have a ripple effect on investor strategies as they seek the best roads to profit amidst the uncertainty. Furthermore, geopolitical events can throw a wrench in the works. Natural disasters, cross-border tensions, or policy changes can shake markets unexpectedly, so vigilance is key for any investor. At AlphaBridge Advisors, we empower investors with actionable insights and cutting-edge resources. Our mission is to bridge the knowledge gap, providing expert guidance on market analysis, investment strategies, and risk management. With unbiased research and tailored support, you'll make informed decisions and optimize your portfolio. Join our community today to access exclusive reports and strategic insights that keep you ahead in the dynamic investment landscape. As we transition into a pivotal earnings season, semiconductor companies stand out in the spotlight, with Texas Instruments and Lam Research set to unveil their financial performances. These reports are highly anticipated, especially in light of the recent market fluctuations that influence investor sentiment and trading strategies. The semiconductor sector is crucial, feeding into a variety of industries, and investors are eager to glean insights from these key players. The previous week demonstrated the inherent volatility of the semiconductor market. ASML's forecast of lower-than-expected sales for 2025 sent shockwaves through the sector, causing a notable decline in chip shares. Yet, in a twist of fate, TSMC's announcement of a staggering 54% increase in quarterly profits painted a different picture, igniting enthusiasm and driving a surge in semiconductor stock prices. This roller coaster ride illustrates the delicate balance between optimism and caution in the tech world. Investors should keep a keen eye on Texas Instruments and Lam Research as they navigate their respective challenges and opportunities. Texas Instruments is particularly intriguing, given its pivotal role in automotive and industrial applications, while Lam Research is a leader in wafer fabrication equipment, a sector that thrives on innovation. Their earnings could provide valuable insights into ongoing market trends and future prospects. Further enriching this earnings season are reports from various other companies such as Coca-Cola, IBM, General Motors, and Verizon. While these firms operate in different sectors, their earnings will paint a more holistic picture of emerging consumer sentiment. The overlap of economic factors between these industries and semiconductors means that the outcomes can influence perceptions of the overall market health. As we shift our attention to economic data, this week appears relatively quiet yet still holds significance. Key metrics, including existing and new home sales, durable goods orders, consumer sentiment, and initial jobless claims, will be released, offering further context to the performance of the semiconductor sector and beyond. These figures will contribute to the ongoing narrative regarding the broader economic landscape. In conclusion, as the semiconductor sector braces for critical earnings, the combination of high stakes and recent market dynamics offers a compelling backdrop. This intersection of corporate performance and economic indicators could shape investor confidence and strategic decisions moving forward. All eyes will be on the numbers, providing clarity and possibly volatility in this important economic theater. As we delve into the world of economic data, it's crucial to highlight upcoming releases that could shape market trajectories. The Federal Reserve's Beige Book is poised to provide a detailed overview of economic conditions spanning its 12 districts, offering investors vital insights into regional growth, inflation, and employment trends. Keeping an eye on commentary from varied Fed officials, like those from Minneapolis and San Francisco, will also be essential, as their cues may signal prospective shifts in monetary policy. Transitioning to global finance, the stage is set for the annual meeting of the International Monetary Fund and World Bank in Washington. Here, influential finance leaders will convene to debate strategies for managing stagnant growth amid soaring national debts. With the IMF projecting global public debt to surge past $100 trillion by year's end, primarily fueled by economic activities in the US and China, investors must remain vigilant. This staggering figure underlines significant pressures on governments and raises concerns regarding their capacity to address economic crises effectively. The impacts of such high debt levels are profound, potentially triggering negative market reactions and hindering governments' ability to implement necessary reforms. Investors, therefore, should watch this meeting closely, as the implications of what transpires could reverberate across global markets, affecting not just bonds but entire economies. Furthermore, as we navigate the intricacies of oil prices after a notable 7% drop last week, it becomes evident that concerns surrounding demand from China, alongside ongoing geopolitical tensions, are exerting downward pressure on crude prices. Monitoring oil trends is critical, especially with Brent and U.S. crude futures witnessing sharp declines, marking significant weekly drops reminiscent of earlier in the quarter. As we assess these developments, it's noteworthy that China's economy has been cooling, recording its slowest growth pace since early 2023. However, silver linings persist, as improved consumption and industrial activity in September hint at possible recovery pathways. Investors must factor these dynamics when evaluating opportunities in the sector. In conclusion, the week ahead brims with pivotal earnings, crucial economic indicators, and essential international events that could steer market movements. Staying updated and adjusting investment strategies in response to these unfolding narratives will be imperative. If you found value in this discourse, don't hesitate to like, subscribe, and click the notification bell for ongoing insights. Thank you for joining today, and I look forward to helping you unravel the complexities of the financial landscape in our next session.